You talk about the clampdown on shadow lenders. I'm just wondering how that might impact their fundraising. Where are they turning to for capital?
So there's not really a clampdown, I would say. There is a higher risk weightage that the Reserve Bank has allocated, but there's no clampdown as such. They're getting money from banks. They're getting money from capital markets. They're also doing dollar bonds. They're doing a whole lot of PTCs, securitization of their existing portfolio. These are the main sources of funding for them. So all these sources of funding will continue the way it is. It's just that I feel that the money that was coming to them from the banks in the form of loans may see a slowdown. It has already started seeing a slowdown. As a result, they will be coming back to the capital markets a lot more to raise bonds. They will try to do dollar bond issuances like we saw Shriram Transport do just a month back. They will also be doing a larger volume through securitization through the PTC route. They will sell their existing books. So that's the way they will generate capital.
The reasons behind your predictions here for finances to climb as much as 30 basis points.
See, what has happened in India, we have the corporate bond spreads at an all-time low of 30 to 40 basis points. So typically, if you see our spreads over the govies is usually 75 to 80 basis points. But this year, because of lower supply and bullishness, people are taking positions ahead of the expected cuts from our Reserve Bank of India, ahead of the inclusion of Indian bonds into the JP Morgan index. So there's been a lot of buying, which has been, spurring these, events that are yet to come. As a result, the corporate bond spreads are at an all-time low. My view is that since NBFCs have now been, exposed to a higher risk weightage from the Reserve Bank of India, a lot of banks are using their loan, their lending to NBFCs. So they will be forced to come back to the capital markets more and more. And that will lead to higher yields because capital markets for NBFCs is shallower compared to the entire public sector and corporate bonds because people have allocated amounts that they want to put into NBFCs. So as a result, I feel that NBFC spreads will move up faster than the other corporate bond spreads.